Hello, you're watching the business headlines on HW News with me, Ali Azhar. In today's day and age, with all the technology out there and the increased vigilance in the system, we're pretty much used to financial frauds being reported more and more. You may think you've seen it all. Nirav Modi, Mehul Choksi, Vijay Mallya, Jatin Mehta, the Sandresa brothers, etc. However, if one collects and collates all these frauds and presents a figure in total, believe me, it does not make for pretty reading. And to top it all off, the source of funds of most of these frauds comes from banks, and more so from listed banks and public sector banks. So, when these fraudulent promoters run away abroad with their ill-gotten gains, it is you and me and the common man that is the ultimate victim. For it is us that lose money when the share prices of these listed banks fall if we have invested in them. And it is from the taxpayers' money that the public sector banks are recapitalized when they fail. An RBI report released late last year stated that banking sector frauds had witnessed a sharp rise of over 72% in financial year 2017-18 over the previous year, and that fraudsters looted around 41,167 crore rupees that year. The sharp increase was on account of large value cases, that is, cases above 50 crores, and were mostly related to foreign exchange transactions, diversion of funds through associated entities or shell companies, and most notably, cyber frauds. Another very interesting element of this report went on to suggest that 93% of frauds above 1 lakh rupees for the same year occurred in public sector banks, which is indeed very worrisome. Let us also recall the massive Punjab National Bank scam perpetrated by Nirav Modi and Mehul Choksi was reported in the same year. Keeping in tune with this theme, a recent response to an RTI query reveals that a total of 53,334 cases of bank fraud was reported during the last 11 years. That is, between financial years 2008-9 and 18-19. The total amount involving 2,05,000 crore rupees or 2.05 trillion rupees worth of frauds have plagued our system in the last 11 years. That's a figure with 12 zeros attached to it. And these are just the reported ones. A breakup of this figure shows that in terms of number of cases, ICICI Bank, SBI Bank and HDFC Bank lead the pack. However, in terms of total amount of fraud, Punjab National Bank, SBI Bank and Bank of Baroda are much ahead of its private sector peers. The chart depicts only a select sample of these banks. However, if one takes a look at all the banks whose data was revealed by the RTI query, we notice that public sector banks, while they may not have an overwhelming majority in terms of number of cases reported of fraud, they certainly make up for that and more in terms of total amount of fraud reported, surpassing 90% in value. This tells us that the cases of high value frauds are much more easily perpetrated in public sector banks, when in fact such banks are supposed to have a greater level of accountability as they deal with public money. However, exactly the opposite can be noticed. An interesting development was that just after the story was published, the Congress party held a press conference the next day and demanded that the BJP government issue a white paper on rising bank frauds in the country, thereby suggesting that they believe that a rising number of such instances are being reported in the NDA regime. Ever thought who earns how much in India's biggest companies? Well, a recent report published by the Economic Times will definitely want to make you quit your job and join these corporate behemoths that are doling out salary packages in excess of 1 crore rupees a year like sweets on Diwali. According to the report, the total number of employees earning in excess of 1 crore rupees per year at India's largest IT services company, Tata Consultancy Services or TCS, stands at 103 employees for financial year 2019, up from 91 in FY17. This figure of 103 employees does not include its CEO Rajesh Gopinathan and COO NG Subramaniam, and also does not include salaries of executives based outside India. And considering TCS has a large presence outside the country, one can expect this number of crorepati employees to be significantly north of 103 if included. In comparison, its rival Infosys has over 60 employees earning in excess of the coveted 1 crore rupee mark. The table gives us an idea of the top Indian executives of TCS and how much compensation they rake in. However, it is to be noted that this amount excludes stock options which vary every year and are paid in addition to the fixed amount as depicted. TCS is known to have a very good retention rate for senior executives, and its success stems from its ability to give people leadership roles without losing them to rivals. The proof of the pudding of TCS's success lies in the fact that nearly a quarter of these 103 employees earning in excess of the rupees 1 crore mark began their career at TCS. Moving on from India's largest IT services company to its largest consumer goods company, Hindustan Unilever Limited or HUL. Here, the Crorepati Club has risen 25% in FY19 from 114 last fiscal year to an impressive 143. Further, nearly half of the managers in this elite club were below the age of 40. The trend of employees earning in excess of 1 crore rupees in HUL after showing a downward trajectory for the last 4 years because the company's decision to merge several job roles has finally reversed in financial year 2018-19 and shown an increase by 25%. This upward trend was seen in spite of the median remuneration of employees falling 4.2% during the year. HUL chairman Sanjeev Mehta's total remuneration fell nearly 3% to 18.88 crore rupees for financial year 2018-19, even as the company posted a 15% increase in net profit. A very interesting remuneration policy adopted by managers in HUL, who are often referred to as the CEO factory, is that they have an option to defer a part of their bonus and receive a larger amount, that is, higher than what they deferred, based on the company's performance in the following 3 years. This not only encourages retention of top-level employees, but also provides them an incentive to improve the company's performance. Thank you for watching HW News. This is me signing off. Have a great day.
Now be the first to know about the latest updates on our new news app. Go on your Android or iOS, search for HW News Network. Download our app, choose the language you prefer to get updates in, and be up to date with the latest news.